It's early March 2021. I'm here with my business partner, Mr. Christian Matthews. Christian, how are you? Nice hair, looking good. Looking
Thank
good.
you. Yeah, it's a
Biggest
lot of
challenge right
hairspray
now, real
today.
estate and trying to get your hair to like come down.
Yeah,
So,
it's this or a little like a not a beret, but you know what I'm talking about. Little like
oh my goodness, please don't go
yeah,
beret. Please don't
not
go.
beret, but you know what I'm talking about. I can't remember
I
what it's
hear you.
called now, but
Okay, let's dive into the stats and charts. I know people want to hear about our hairdos, but I mean, not at all. So let's jump in here. Do you see my screen share? We're good?
we're good.
Awesome. Perfect. So here we are. Wow. Where is the market? The market is upside down and inside out. It's the condo market's done a complete 180. So let's start by focusing on the low rise market, and where we're focusing our efforts, our conversation today is in the downtown core. So these districts right here, if you need information on east, west, north, we have them. Just let us know. We're happy to send it over to you. So every month, the Toronto Real Estate Board produces a wonderful GTA-wide stats pack, if you will. We pull all of our information from it and then digest it. But a lot of realtors will comment just on the GTA on the whole, which is very helpful, but can be very misleading when you read about what's happening in Newmarket versus Leslieville, or what's happening in Oshawa, Scarborough versus High Park. So this GTA-wide stats does show, that sales were up 52% over last February. New listings were up 42%. Active listings were down about 1%. So, we're getting less supply on the market. Average prices are up 15%. Homes are selling faster. There isn't much available. There's no big surprise there. Would you not agree?
Yeah, things are flying off the shelf.
Yeah, agreed. So let's start with the low-rise sector. When we talk about low-rise, we mean detached, semi-detached, and to some extent townhouses. Now, townhouses can be a little bit difficult to analyze because you get some that are condos, some that are freehold. So we're going to lump them all together today for this conversation. Looking at average price growth over the past year, what you'll see is we're comparing in this chart the month of February 2020 to the month of February 2021. And I want to remind everyone that February 2020, we were still pre-pandemic. The pandemic was, we knew about something happening, but the real estate market was on a tear last year, January and February, so much so that I sold a property that I had owned for 10, 12 years because I thought the market was just primed for a great sale price, which we got. So looking at detached home prices in Feb versus Feb, we had a 24% increase. Semis were down 3%, which is not at all the case. Townhouses down 11%. So this is why we're saying take it with a grain of salt. Looking at the 12-month rolling average, where we try to smooth out those seasonal fluctuations, the fact that it's been 12 months, what we're seeing is detached homes up 8.5%, semis up 7%, and townhouses flatlining. And this is a stark contrast to what's happening in the suburbs. The suburbs, I'm hearing 20, 25, 35% year-over-year growth. And that is problematic. That is why in a lot of cases we're hearing people talk about there's a bubble, and that bubble really is in the suburbs. And this is where people need to be cautious if they're buying things in the suburbs. This great graph here that we present, wonderful, shows the seasonal fluctuations, the ebbs and flows, but this red line that does show the pandemic's beginning, if you will, we can see that overall since then, the average price for detached semis in towns has generally been trending upwards. This is really interesting to me. This is where we get the different bandwidth and the number of sales and the average price growth for each category. So 600 to a million. These are detached home sales that we're talking about to begin with. Again, we can certainly send all of these stats over to you, but I think the biggest thing for me is what you're seeing is this 33% drop in home prices not drop in prices, drop in the number of sales between $1 million and $1.5 million. Somebody might look at this and say, oh, well, there's fewer homes selling. No, it's just because I think you're seeing a lot more home sales in the $1.5 to $2.5, $3.5 million price range, which is reflected here. I mean, no big surprise. And even this year, when we're talking about the average price range between 1.5 to 2.25 million, somebody might say, or use this as argument to justify a lower purchase price. You have to remember that these are just averages, not the greatest representation. We may want to look at the mean to give us a better idea of like what are homes actually trading for in this price range, because we've got a $750,000 range within that $1.5 to $2.5 million price bandwidth. So I think it's important to note. And then we do have the same statistics here showing in the semi-detached and the townhouse market, what's been going on. And what I'm taking out of this is if you look at the semi-detached market, if you look under $1.5 million, huge increases over last February. Now, noting that last February, there just wasn't a heck of a lot available for sale. But I think, again, applying that same principle that I mentioned before, this is just average price for semi-detached. So if you're looking at $1 million to $1.5 million, you might say, well, there was a 2.9% decrease in the average price in that category. I'm going to apply that same principle to my negotiations, but you have to remember these are just averages. So I think take everything with a grain of salt, dig in a little bit deeper. And again, these are across these downtown districts, which you could even analyze in a little bit more depth. I mean, you're seeing bidding wars. I'm seeing bidding wars. Last February was red hot, and it turns out that this February is much the same. Would you not agree?
Yeah, it's amazing how fast that we've kind of turned around from this pandemic. I mean, like you said, last January, February, we were saying how, I think there was talk about being a record number of sales for the year, and then the pandemic hit, and now we get into 2021, and we're kind of blowing past where we were at the beginning of last year. So
Yeah.
bidding wars everywhere. If there's a bully offer available, people putting bully offers in, getting 8, 9, 10, 12 offers. So it's a bit crazy out there.
Yeah, agreed. So let's talk about why this is happening. So we're going to start by looking at the number of sales, and detached semis and townhouses we're focusing on here simply on low rise. So across all housing types, we saw an increase in the number of sales over this time last year. I don't think there's any big surprise. People continue to want more space, working from home, kids learning remotely. Those that can afford it, those that are privileged enough, are making the decision to move and buy a bigger home. I don't think that this demand is going to subside anytime soon. Do you?
No, that's why I think you see such the big numbers there in the semi-detached and the townhome. I think a lot of those buyers that are in the market are those ones that need that extra space, that are coming from maybe a condo and they're looking to get into the freehold market, and they just want more space. And that's why I think you see those numbers really jump up this year.
I also think they're getting priced out of the detached market, right? Like it's
That's
hard. So it's,
absolutely.
you've got a very healthy budget, but unfortunately, depending on your neighborhood, it doesn't get you that detached home. So you, of course, slide down the ladder. Well, what's the next great option? Well, semis or townhouses. Looking at new listings, because, John Pasalis with Realosophy, does some great market research, really said that it's not so much that we have a supply problem. We continue to see supply coming to market. It's this demand shock that we're experiencing, where it's like people, in my opinion, have nowhere to spend their money. They're not traveling, they're not eating out, they're not really going to shops, they haven't been able to. They're stuck at home, they're working from home. They're like, I need more space. And if you're, again, lucky enough to still be working, you're making that move up. So that's where I think you're seeing the real shift happening, is just this demand shock from a domestic buyer. So we've got fewer detached homes coming to market. This is just new listings. We're seeing a lot more semis coming to market, a lot more townhouses, right? But then this is the big kicker for me, is what's available at the end of every month. We're seeing fewer detached homes available. We're seeing a 43% increase in semi-detached homes available, and a 53% increase in townhouses. And I'm sorry, it's a little bit cut off here, but at the bottom you can see 16% increase in sales and an 11% decrease in detached home active inventory. So supply, sales are outstripping supply. That's why you're seeing these huge price jumps. Same thing with semi-detached, and the same thing with townhouses. So as long as this trend continues, you're going to see prices continue to jump. This is that 12-month rolling average of supply, months of inventory. And you can see here in my scribbles and highlights that a balanced market is up here, smoothing out the monthly fluctuations. Since the pandemic began across all low-rise home types, the months of inventory has dropped. That's why it's so competitive. That's why Christian is talking, and we're talking about these bidding wars and these bully offers. I mean, with this kind of supply from a 12-month average, there's no surprise that bidding wars continue. If I look at the month, just the single month supply of inventory, so comparing where we are today versus the number of sales, we're terribly low. And I say terribly because it's very challenging being a buyer in this market when you've got 0.8 of a month of supply of semi-detached inventory in the downtown core. Of course you're going to have in a month and a half, you're going to be running out of inventory if the sales continue at this trend. And then of course the sales to new listing ratio, really what we're highlighting here is for every, let's call it 10 homes that are coming to market, If you're looking at semis, 7.1 of those 10 are going to sell in that month. Like that, those are some very, very big numbers, and the reason why. So let's dive into the high-rise stats. That segment of the market that I think everybody really thought was going to suffer tremendously during this pandemic. And here we are focusing in on the downtown core. Again, a reminder, we have different stats for different neighborhoods, so just let us know. Condo prices comparing Feb 2021 to Feb 2020 were down 13% as an average. An average is a difficult number to, to say that this is the absolute reason why I'm, submitting a lower price, because right now I'm not seeing condos trade for 13% less. Are you, Christian?
No, not at all. I was just in a trying to put a bully offer on a property that sold last August. And if you look at pricing for last August, it was way above where we are now. And the property ended up selling above the August kind of average price. So things are changing quickly, like week by week in the condo market. It's astonishing, actually.
In the last 4 or 5 weeks, the condo market's done almost a 180 from where we were. It's amazing. So looking at the 12-month rolling average, condo prices are only down about 1%. But again, take this with a grain of salt. This is a lagging indicator, the average price growth, if you will. What's more interesting, we'll get into it in just a minute here, just looking at the 12-month rolling average price growth here. Since the pandemic began, we never really kind of bounced back. We've kind of been dipping back down, but this really sharp increase that we're seeing now, I think is going to continue. And if I look at the average condo prices, the different bandwidth, this is, again, representative of the fact that I think your investors are coming back out of the woodwork. You're seeing students, people who are entering into the job market come back and scooping up these smaller condos under 500,000. We had a 340% increase in sales activity over last February. Now, last February, there wasn't a lot of supply to begin with, but this is a massive increase. Even though prices are down 2.7%, if this trend continues, you are not going to see these average price changes in the negative. And again, a testament to how strong the market is today. I have to remind everybody that last February, things were bananas. Like the condo market was very, very hot. So to only be down 2.7% actually, to me, shows how strong the market is today. So, across the board, massive increases in all categories, all price ranges, and these price decreases, I take them with a grain of salt, because I don't think you're going to be in a position where you're going to be negotiating down. I'd be happy right now if you're not paying over the asking price of the average condo. So let's talk about sales activity. 93% increase over last February. Again, last February, probably not representative of where a typical market, number of sales existed, just because there wasn't a lot of supply, but 50, 60% over the 3 and the 5 year average, about 100% over the 10-year average, pretty notable. I want to comment on this here. I know, Christian, I said I wasn't going to include too many more of these charts, but look at this here. Normally, in the month of December, in the month of January, we see a dip in terms of sales activity. We saw the exact opposite. It's like somebody electrocuted the condo market back to life here. What a massive increase in the number of sales. Like this is amazing. Absolutely. And when
sorry, just to jump in there, B, I think that's a lot to do with a lot of people. I think a lot of people were sitting on the sidelines over the past year as well, once the pandemic hit, not knowing what to do. And it seemed like you said, just a switch turned on in kind of the end of the year into 2021. And there's just been a ton more buyers just getting into the market.
Yeah, I agree. So let's get through this here. New listings up about 55%. This is good. We need that supply. We need to try and keep the market in check. But what we have here is a number of active listings. So we saw it at a 63% increase in the number of active listing supply at the end of last month, which again, sales outstripping supply. With that continuing to happen, we're going to climb out of this kind of hole that the average price growth fell into. And this right here, when I'm looking at this chart, we peaked, the average, supply peaks back in October, November, and then since December onwards, the supply levels have just continued to drop. So if this continues, this months of inventory supply graph here, we really thought that this was going to head up and take us into balanced market territory. But as quickly as it's gone up, it's seemingly as quickly coming back down. So it will be interesting to see what happens over the next couple of months. And then, of course, this single month, this to me is telling, and this is the reason why we're seeing condos flying off the shelf. We've got 1 month of inventory. So if nothing else was listed for sale, in 1 month, all the condos would be gone. We're more or less in line with the low-rise market here in terms of months of inventory, which is a stark contrast from where we were 3 months ago, right? I mean,
yeah,
amazing.
And I think too, I want to mention too, even though these stats are based on, you know, kind of the downtown core, we're seeing a lot of the same thing happening on the west and the east side. And to give that some context, there is, you know, in Leslieville, we put an offer, a bully offer on a 2-bedroom property, and I look back at the comps, and there's only been 3 2-bedroom units for sale in 2021. Just to show you the limited amount of inventory and why there's been so many offers and bully offers. I mean, this heading down so quickly, I think, caught us all by surprise.
Agreed. Surprised is probably the best descriptor of what's going on. At least I didn't think it would happen this quickly. So let's finish off with a real quick synopsis of the rental market. Rental market continues to lag. You know, average rents are down around 15% in the downtown core. And what you'll see right here is that, you know, the number of transactions is beginning to change. We seemingly have bottomed out. You know, prices month over month are up ever so slightly, the first time since last spring. And I think if, you know, Canada gets their immigration, well, first of all, if we get our vaccine rollout happening a little bit more quickly, if we look at what's happening around the world, we will get back to a situation of normalcy. And if we do get there, I'm almost concerned that if the rental market heats back up again, you know, we're going to be in this situation where prices continue to jump across all housing types and categories. So let's leave it there for today. If anybody has any questions, reach back out. We've got so many listings in the works, which again, hopefully this will help some of the buyers out there find their next home. Christian, I look forward to next month. It should be another interesting month of activity.
It's going to be good. I can't wait to see the stats.
All right. See you then.
All right. Cheers.